You have to pay attention to what's coming out of Japan right now. If you ignore this, you're going to get completely blindsided by the next violent move in crypto. Because this recent bloodbath, that wasn't just some random correction. No, this was a targeted hit. And it's all because a massive $20 trillion global trade is finally blowing up. A trade that's been secretly propping up asset prices for decades. Stick with me, and by the end of this, you'll understand exactly what this hidden force is, and more importantly, the two key dates that could send Bitcoin rocketing to 100 grand or send it plunging towards 70.
I mean, just look at this quote. To really get how severe this was, you have to understand this wasn't some gentle little dip. It wasn't a healthy correction. No way. The on-chain data, the sheer speed of the sell-off, it all points to one thing, a deliberate, almost mechanical liquidation. Someone flipped a switch.
And wow, do the numbers tell a story. We were right there, knocking on the door of a new all-time high, almost at $93,000. And then, poof, in just a few hours, the floor just completely fell out. We're talking $8,000 of value, gone, just like that. It's the speed, the absolute brutality of it, that has everyone so spooked.
Okay, so first things first, let's really break down the immediate aftermath. What did this whole sell-off actually look like on the charts?
And this is what's so telling. Look at the pattern it created on the chart. Traders have a nickname for this. They call it the Bart Simpson pattern. You know, you get that sharp, spiky hair going up and then a sudden vertical drop. This isn't what normal organic selling looks like. Not at all. This is the clear signature of forced liquidations, a brutal domino effect.
So the big question is, what caused it? It wasn't the usual FUD, you know, some random news out of China. It wasn't just some whale deciding to dump their bags. Nope. The real reason is so much bigger. We're talking about a multi-trillion-dollar ticking time bomb in the global economy. And that bomb just went off.
And the scale here is just staggering. Some conservative folks will tell you it's around $3 or $4 trillion. But a lot of market insiders, they think there's up to $20 trillion at stake. All of that money wrapped up in one single gigantic arbitrage play that is now violently unwinding.
So what is this massive trade? It's called the Japanese yen carry trade. And for decades, it's basically been the secret rocket fuel for asset prices all over the world. But now it's the anchor that's dragging everything down with it.
Okay, so here's the deal, and it's actually pretty simple. For more than 30 years, Japan has had crazy low, basically zero interest rates. That made their currency, the yen, super cheap to borrow. So what did everyone do? Hedge funds, big banks, all the major players, they borrowed trillions of yen for practically nothing. And then they took all that cash and poured it into things that would give them a better return. You know, US stocks, real estate, and yup, you guessed it, crypto.
So here's the life cycle of this whole thing and why it's all falling apart right now. It all started with step 1, borrow that super cheap yen. Easy enough. Step 2, take that money and invest it everywhere else to get a higher yield. For decades, this was just a money printing machine, a total gravy train. But now we get to step 3. Japan is finally signaling that they're going to raise interest rates. And that changes everything. All that cheap debt suddenly becomes expensive debt, like overnight. Which brings us to the final, painful step 4. Investors now have to scramble. They have to sell their assets, and that includes Bitcoin, to pay back those loans.
And listen, this isn't just some theory. The fuse has already been lit. We saw it when Japan's 10-year bond yield, which is a really key indicator for interest rates, spiked to its highest level since 2008. Think about that. The last time this happened was literally right before the Lehman Brothers collapse. This is the market screaming that the party, the multi-decade party, is officially over.
So what's happening now is this huge global event has just ripped the crypto market in two. It's fascinating, really. On one side, you've got pure, unadulterated panic and forced selling. But on the other side, you have deep conviction and what some people are calling a historic buying opportunity. And you can see the fear plain as day in the data. Just look at the numbers for November. We saw a staggering $3.45 billion flow out of Bitcoin ETFs. And get this, a huge piece of that, over $2.3 billion, came from BlackRock's ETF alone. That tells you that even the big institutional players are getting nervous. And as if that wasn't enough, that overnight crash triggered over $646 million in forced liquidations. That is just a staggering amount of money. It was all wiped out from traders who were over-leveraged,
all before most of us had even had our morning coffee. Brutal.
But this is where the story takes a fascinating turn, because while all the smaller, short-term holders are panic selling, and I mean they're pushing the market to its third most oversold level in history, the big money is doing the complete opposite. The on-chain data is crystal clear. The whales, the large holders, they're buying this dip. They're accumulating at record levels, just soaking up all the Bitcoin that the weak hands are dropping.
And it's not just some anonymous whales either. The miners, the actual people who secure the entire network, they've cut back their selling by over 80%. And then there's this bombshell, Vanguard, the $11 trillion asset manager that was famously anti-crypto. Well, they've completely flipped. They've capitulated. They're now letting their clients buy Bitcoin ETFs. That is a massive signal.
And Michael Saylor from MicroStrategy really sums up this conviction perfectly. His take is simple. Bitcoin is past its riskiest days. Now that institutions are here and the supply is capped, there are really only two outcomes. And since it's not going to zero, well, the only other option is that it's going to $1 million.
So that's where we are right now. The market is basically trapped in this tug of war between a huge macro storm and this incredible wall of institutional conviction. So what happens next? Well, it all comes down to two very important dates.
All right, pull out your calendars for this. First up, December 10th. That's when the U.S. Fed makes its rate decision, and that's going to set the mood for all global markets. But the real show, the main event that everyone is waiting for, is December 18th. That's the Bank of Japan's big policy meeting.
And honestly, the stakes could not be higher. It's a fork in the road. Path 1, the Bank of Japan goes through with it and hikes rates. If that happens, the yen carry trade unwind goes into overdrive, and that would almost certainly push Bitcoin down to test that $70,000 level. But path 2, they get nervous, they blink, they hit the pause button. If that happens, you could see an absolutely massive short squeeze that sends Bitcoin ripping right back towards $100,000, maybe in the blink of an eye. So that's the massive dilemma we're all facing. This huge macro story has tied Bitcoin's fate directly to what a couple of central banks decide to do. So the question we're all left with is, are we watching the start of some catastrophic market reset, or is this the blood in the streets moment, the single biggest buying opportunity we're going to see this cycle?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.